All right, so welcome to another episode. Today, what I want to do is give you some thoughts on Disney. It's coming into the $100 price level after earnings. And as you know, the market's not doing so well. So I'm going to give you some thoughts and tidbits here. Keep in mind, none of these are recommendations to buy, sell, or trade anything, just my own opinion. And if you want to go ahead and grab my opinion and also work with me one-on-one, definitely check out the Traders Fly website. There's a session you can book, a single coaching session, or a one-on-one mentoring if you'd like to work with me for 3 to 6 months. Usually I deal with people with in the option space for that. So you can check out the Traders Fly channel if you're into options. Okay, let's go ahead and kick things off on Disney here. Disney had a little bit of trouble. COVID basically is saying, hey, there's some closings over there in Asia. With the theme parks, they've been struggling a little bit. A lot of parks, they're pretty crowded. I lived in Florida for many years, and I've been to Disney parks a handful of times. But actually, I preferred the Busch Gardens park in Tampa there over Disney in some cases, just because, everybody wanted to go to Disney. Everybody wanted to go to Disney. But it was just very crowded. And when you look at COVID, that tries to keep its distance, makes it much more difficult, I guess, to keep that up, right? And then also they talk about the streaming thing. Now you've got people, they've got streaming. Oh my God. When you look at streaming, you got stuff like Netflix and Hulu, and you got Disney Plus, and you got Apple. I mean, how many services are you going to be paying for? I wish there was just like a company that, hey, you did a cool deal and here's like $80 and you get everything. Okay, cool. That's what cable used to do. But now all of these companies, they want their own, right? They want to do it on their own. And it actually makes it less efficient and it makes it more expensive for the consumer. Anyway, so that makes it a little more difficult there. So all in all, and then Kramer says Disney's a buy. So again, it just depends what valuation and what you're looking for here. I think you're coming right into that $100 mark. And the last time Disney had a huge flush out was over here in 2020, what you can see. And it was right around that, a little bit below where we're at right now. I think it was around 85. We'll check it here in a second. But it had a flush out, and this was like an emotional time frame that people dumped the stock and shares. So this was 81.95, call it $80, and now we're getting back into those levels. Not quite there yet, but from the highs we are down. Look at this, 51% down. Oh my God, on this stock we're down 51%. So that doesn't look really good. And a lot of people, especially that probably bought somewhere over here, they're just barely breaking even, if not at a loss now. So that's really not good news. You've got volume right here that's picking up speed. So this is quite a bit bearish. So there's a lot of selling pressure that's coming into the stock. And people are, of course, getting worried, about the market overall is acting weak and so on. So if you really look at where's this stock holding up? Look, if you want to go back to 2016, you're kind of in that zone, right? Think about it. You're at 2016 lows and support, and you're nearly there. So you're taking out like 6 years worth of gains, or 6 years worth of, corporate earnings. And that's quite remarkable when you really think about it that way, right? So we'll be there soon if we're, very closely within, we're within like $12 of that range. So here, this price was 90 and you're at 102. So you're $10 away, $12 away. So it's very close, quite amazing. And when you look at this from a chart technical perspective, just a little bit to go right here, and you'll be in that zone. So my thought on Disney here is, the stock's had a really nice run, and to really start looking at things, we had a breakdown. This, I think, is kind of a little bit of confluence. It's a little bit of a fluke, sort of say. And here was our big breakdown, and this stock has been trending kind of to this upside, but now we've got a huge break. You've got to really zoom out to really see what this stock is kind of all about. So here's kind of one trend line where we had some movement, but then we have to recalibrate this trend line. So now you can see, okay, we've got this movement there, but now it's breaking down again. So what levels are really, really good? So you got to go back to the year 2000, 2011, and now you're way over there. So I don't think it's going to get into this $50, $40 range. That's like if you're massively panicked massive short sellings coming in, like really .com bust kind of stuff. So I think you're kind of right in line right there about the $90 level where you could see a nice support level coming in. Usually you see a lot of these things in the history books, but you don't always see it happening because the last, 10 years or so, like look at this, the last 10 years, we didn't have to deal with this. So you have to rely back on your history books of like how these things function and behave, or even the intraday stuff. So it's kind of like, okay, so now I'm looking back 10, 12 years that this mega support would be around 50, but that's kind of a little not realistic. So that's why I'm saying maybe 90 is probably where this stock will come back down, and maybe then we'll get a little bit of a bounce because that'll put it back about 7 years in that stock. Now the problem is you don't know if 102 or 100 is going to be a good deal, or even 90. It could even oversell and go down to about 87, 85, and then bounce right back. So you're kind of looking in that range and time frame. And right now what we've had is month after month, we've been getting red bars. Now, eventually you'll get like look, even here you had 1, 2, 3, 4 red bars kind of in a row, and then you had some green ones. So here, if you calculate like all these red bars here, you're kind of due for a light green day soon, or green month sometime soon. And you're kind of right there. So it doesn't mean it's going to happen right away, but look at all the red bars there, red bars here on a month-to-month basis. Eventually you'll get some green ones. And when you get the green ones, they usually do come pretty quick. So be careful, because when you get a big snap down, you'll get a big snap up. So you might actually get a very quick snap up and you might not even notice. So looking at it from this perspective, you're coming right into that $100 mark right now. You can see we had like a flush sale and then the stock popped a bit. So I think people are going to play this one around that $100 range for now. If you really get some panic setting in, 90 and 81, 80 is kind of the other really good sweet spots that people will watch because you've got those supports right here on the weeklies coming in right around that $90 zone. So that's what I would look for, is for a support around the 90. Right now, 100 is psychological, but 90 is kind of technical from a pricing and money allocated standpoint. And if you pop, watch out for resistance and rejection. This will be right about the $120 price level. So we're kind of right there in Disney. Would I kind of nibble here? Depends. You could nibble a little bit, but I would be careful getting too aggressive just because the overall market is still a bit weak, shaky, that kind of thing. I'd rather wait to see 3 to 5 good up days and get in it then, rather than try and catch it down here. So be mindful, be careful, don't chase, let things digest, go very gentle and nibble a little next month, nibble a little again. And then that's when you can say, hey, I'll spread my money over 3 to 6 months rather than getting in all at once. So anyways, that's my take on this one. It's not too bad, but the market is acting weak. So you want to be a little cautious. We are getting this downward motion, and we're not even getting any rotation here to the upside yet. But you're looking at a possibly oversold area on market. And this one is down about 50%, 51% from the highs. You were up at 200. Now you're way back lower beyond that. And the stock really, when you look at it right now, you're really pulling back for a while and taking out a lot of gains. So I think it's going to have some potential soon. I don't know if that time is yet, but it will probably be a fairly nice move once it starts happening and pushing to the upside. So anyways, thank you so much for joining me. Hope you enjoyed it. Don't forget, if you want to grab a one-on-one coaching session or work with me, on a 3 to 6 month time frame, we're working on your option trades and strategies. Definitely check out the Traders Fly website. Other than that, enjoy the rest of the week ahead. I'll see you next time.